Hello, and thank you for joining us at XM.com for this Forex Preview video. The Bank of Canada meets on Wednesday. We'll be having a look at this policy meeting coming up this week and the outlook for the Loonie. I'm Cristina Marujos. Joining me today is investment analyst Cristina Barcenido. Cristina, markets have fully priced in a 50 basis points rate hike at this meeting. And given that we're probably not going to have any surprises as to the announcement, investors will likely focus on what policymakers have to say about future rate hikes. However, are they likely to be as hawkish as they have been recently?
That's right, Christina. Investors are almost certain that the Canadian Central Bank will deliver another 50 basis point rate hike tomorrow, which would be the second aggressive increase in a row. Well, that would be considered a quite extreme announcement during the pre-pandemic period, but currently the economy is facing its highest inflation since 1991, which is above its projections. And given the non-stop war in Ukraine and the continuous sanctions fight against Russian energy supplies and financial services, inflation will probably remain elevated, at least elevated for an extended period of time. So given current conditions, well, a fast stimulus reduction can be easily justified. The good news is that the economy is at a good shape at the moment. The unemployment rate in April was the lowest since 1976, and business PMIs remain comfortably in the expansion area in the same month, despite pulling back. Well, Canada is an energy exporting country, so higher oil prices bode well for Canadian exporters as well. And generally, we can say that the business sector is operating in a healthy area. The bad news now is that the fast monetary tightening campaign may not have a soft landing. Businesses are struggling to find new workers at the moment, and that may restrict economic growth. Of course, wage growth has increased, but it's still below the inflation rate, and the private savings rate has already diminished substantially, and it's close to pre-pandemic levels. Strikingly, the housing market is now showing signs of weakness, and that's creating more concerns because the ratio of household debt to disposable income hit a new record high at the end of 2021. Recent statistics showed a monthly drop of 12.6% in home sales for the first time in 2 years. The home price index also edged down as well on a monthly basis, but remained elevated in yearly terms. Well, of course, the central bank will need more data to become more cautious about its rate hike strategy. So I suspect that its communication may not change much. Now, about future interest rates increases, well, the central bank's estimate of the neutral interest rate stands at 3 to 4%. So apparently, policymakers may stick to the plan, delivering more rate hikes in the coming months to cool inflation. Though whether the rate hike path will slow down, returning to potential normal 25 basis point rate increase, that may depend on the coming data releases. So overall, perhaps investors will likely be sensitive to any comments about the economic outlook that may sound less hawkish than they expect, but the central bank will probably be very careful with its communication.
Let's also have a look at the Loonie. It has been bolstered recently by elevated oil and energy prices. Can the currency gain more on the Bank of Canada meeting this week?
Well, the rate announcement itself may not surprise investors because a 50 basis point rate hike is well priced in, and investors expect another similar 50 basis point increase to 2% in July, and then a few 25 basis points rate increases during the next month. So given the current economic conditions and the abnormal inflation rate, I don't think that the Bank of Canada will diverge from its rate hike plan. It will probably need more evidence before it adjusts its policy strategy, as we said before, and currently it's too soon to say whether inflation has peaked and a recession is on the way. Given the initial signs of weakness in the housing market, it will probably talk down a 75 basis point rate increase. So I think the Loonie may not gain much from the policy meeting tomorrow. Well, the Fed hasn't changed its communication much either, so the Bank of Canada will probably act in the same way, remaining mostly neutral until further evidence. Now, from a technical perspective, dollar Loonie is building support around its 200-day moving average, which increases the case for a rebound in the pair. But fundamentally, for that to happen, for the Loonie to lose ground, the central bank will need to question its rate hike policy and signal a faster slowdown in rate increases than analysts expect.
Cristina, thank you for joining me today. And thank you for watching this Forex Preview here at xm.com.